So let's do one thing. Let's welcome our first guest on the show. We have Ramesh Damani, who's joining in. And Ramesh, first of all, happy Diwali to you, to your family, to your entire team. It is a year filled with gratitude, right? There's so much that's happened, and we have come largely unscathed. So, so glad that you're with us here on this Muhurat session. How are you feeling this time around?
Thank you, Sonia. Thank you, Nigel. Thank you, Prashant. Happy Diwali to all of you and all your viewers. You're right. The year has been filled with gratitude, a little bit of joy, but also for us, a little bit of sadness because one of our dear friends, as you know, passed away this year. So it's a mixed bag. But overall, the mood on the last street is buoyant. And I think we are more optimistic about the next year than we've been in a while. So I am hopeful going into this Muhurat session, Sonia.
Mr. Damani, great to speak with you as always on the Muhurat session. Happy Diwali, Prashant here. You know, Mr. Jhunjhunwala will be missed, won't he? And I think on a day like today, when he was always there to share his nuggets of wisdom and kind of share his experiences, I mean, you miss him more. But I think the message resonates very, very strongly, which is look at the long term and stay bullish, isn't it?
Yeah, absolutely right. I think, of course, we'll miss him. Diwali and budgets were a fixture for Rakesh, and he was always so prescient about his calls on those days that we truly miss him. His band of friends really miss him. But his underlying message, I think, has now gone through to the Indian audience that it's your time in the market that's important, not timing the market. Stay bullish on India, stay invested, ride the highs and lows. I think these are all the lessons we learned from him. And, you know, I hope the younger, newer set of investors will learn the same lesson, that this is not a gambling casino. This is not a get in, get out, make your money. If you want to create long-term wealth, you need to be long-term in the markets.
Hi, Mr. Damani. Greetings to you and your family as well. Nigel on this side. Well, you know, yesterday Virat Kohli sent the entire nation into a tizzy with that innings. You know, the last year or so, it reminds me of a Rahul Dravid sort of innings. Because we had plenty that was thrown to us, but the Nifty is more or less flattish at the end of the day. So it's important to get our eye in. Now, given the fact that you're sounding optimistic about the coming year, do you think it's time now to, you know, open up the shoulders, play the long handle, maybe hit it out of the park? Are we bracing for a rather good year? Maybe double-digit returns on the headline index?
Well, let me just put in perspective, Nigel, and happy Diwali to you and your family. You know, I think in the last few years, the world has shifted on its axis, and we've not realized that. I think we came to the markets in the late 80s when the Berlin Wall was falling, and you had an era of low interest rates, low inflation, globalization. I think that is about to change. The two great benefiters of globalization, the whole world benefited, of course, but the two great benefits were China and India. I'm sorry, China and America. America is the consumer and China is the producer. And in a corresponding way, Russia, because it's the largest producer of commodities in the world. Now the world has changed. The partnership between China and US seems to be destroyed. And I think it's more important that we'll have an access coming up from China, Russia, as a commodity producer and a commodity user. But the world will be looking for alternative sources. And I think India, with its large domestic economy, relatively small exposure to global trends, relatively small exposure to global supply chain, stands to benefit. So I think if you told me, for example, that the foreigners would sell $30 billion last year and we'd still be within break-even of the index, I would have taken it as you've said. And I think that's exactly what's happened. And now, once the vicious circle of selling goes away, replaced by a virtuous cycle, the FI seeing the growth in India, come back and invest in India, I think we're setting up ourselves for hopefully a Virat Kohli type of year.
Okay, in fact, you know what? We have to take a short commercial break, but it's befitting the kind of move in the market. Looks like the new Samvat is going to start on an absolutely positive note. So do stay tuned in. We'll be back in just minutes from now. Welcome back, and once again, here's wishing all our viewers a very, very happy Diwali. Hope this is the best one yet for you, your families, and for, of course, your businesses, your work. It's been a challenging last couple of years. In about 30 seconds from now, we'll have the first token trade on the Samvat session, and the indications are that it'll be a bright shade of green. The Nifty is up 160 points as we speak. Good numbers from the likes of ICICI Bank. That's the first tick over there. The bell getting rung at the Bombay Stock Exchange, and that token trade, it's a very auspicious day. And the first tick is well in the green. Look at that, 1% higher on the Nifty right now. The Sensex up 620 points. ICICI Bank is roaring from the front on the back of good set of numbers that the company has reported. Bajaj Finserv, SBI Life, Tata Motors, HDFC, Asian Paints are the other stocks that are not too far behind, up about 1 to 2 odd percent. It's a banging opening, you'd have to say. The only stock that's perhaps not participating is HUL, post its numbers. That one's down about 3 odd percent. Reliance as well, it was a mixed bag this time around. The consumer-facing businesses are doing exceptionally well. However, oil to chemicals is not that great, but Reliance Industries also holding up onto the green line. So that's the Nifty for you. The first token trade on this Diwali session, the auspicious day, has opened well in the green, up almost about 200 points on the Nifty, and there's plenty happening in the broader markets.
Well, that's right, Sonia. I know quite a few stocks. I don't know whether it's token, but there are some large volumes in there. Max India, the stock is up 20%. I think we should pull that one up. You have Saskin Tech, that one's up and about. You have D-Link, that as well. I'm just pointing out some of these stocks because the volumes are rather large on these. One, Orient Paper, well, massive volumes out there for a motor trading session. And South Indian Bank as well. Remember, there was some promise out there. That one as well up close to around 6%. So plenty of action from the broader markets as well. And we had a off day, so we're catching up with what the US markets did. And that explains why we're up close to around 200 points. The Nifty Bank, out of the blocks, well, it's up close to around 500 points. So good start, Prashant.
I mean, absolutely. No two ways to sort of describe what's going on. We're at, what, 17,765. By the way, was that Ajay Devgan, guys, on the screen at the BSC?
I did not
I think
notice.
I got a small glimpse and...
Movies, markets, malt.
If it's Virat Kohli, then I'm interested.
Actually, we should have started this the chat with...
anyone else.
Nigel spoke about it, but I think we should have started with cricket today. I mean, what a match yesterday.
Champion.
Well, it's all green, so let's put it that way. And we'll get down to specific stocks, etc., in a bit from now. More stocks, etc., in a bit from now. But 180 points, it's a solid start. Ramesh Damani, of course, is still with us. Ramesh, thanks for waiting. Just a quick word. I mean, if you've been following what's happening in China with that party Congress and, President Xi re-elected, etc., does it in a way solidify expectations that, the TINA factor within emerging markets? I may be exaggerating here to make a point, but do you think, I mean, it does shine the spotlight on India in a much better way now with what's happened? I don't know if you've seen the Chinese stock market reaction absolutely in the dumps today. Go on.
I didn't see the reaction, but I agree with you that you're not overstating the case. I think there's as I mentioned earlier, the Earth has shifted on its axis, and I think China for 20 years has been the one source destination for FDI investment, for stock market portfolio investment, and the whole relationship between US and China was built post-2000, China entering the WTO. I think that's changed, and I don't think that it's coming back in a hurry. And China's moved closer to Russia now, so it would be that those two will be helping each other. So the Western democracies, Europe, America, will be looking more and more towards India. So that is the base case for India at this point. The reason a lot of analysts are saying that this is said to be India's decade, this is said to be a 10-year bull run, I think that's part of the logic that we're using, that we have a stable body politic in India, we have reforms that have been going through, and the bull market that started when the finance minister cut the corporate tax rate is alive and well. I mean, it tested it during the COVID lows, it broke that, but just briefly. So it suggests to me that the bull market that began almost 3 years back in September is probably well and on way. And I think part of the logic will be more clearer later on, but will be that China is no longer a dominant attractor of capital flows in the world or a dominant taker of intellectual or oxygen space in the world, that India will now gets its fair share.
Okay, that's interesting. Ramesh, we were just having a conversation with S. Naren on our sister channel, and he made a very interesting point. He said that for the longest time, I've never recommended gold and silver to investors, but this time is different. When you're doing your asset allocation for this year to next, I recommend you put some amount of it in gold and silver as well because it's looking attractive. Do you believe that the time has come now to sort of shift a little bit away from equities and into other asset classes purely because of the challenges that we're dealing with globally?
Sonia, I beg to disagree. We are hoping for a 10-year bull run in equities in India. Why would I buy gold, which pays me no dividend? It won't even tickle me back. So I'm very clear that I want to remain invested almost fully in equity. I don't even like FDs at this point because inflation may eat up into your returns out there. So you want an asset class that will outperform inflation and plus give you a dividend. So I think that gold may be a fear factor, may rise a little bit here and there, but I think most investors are far better off owning equities. Very clear about that.
You know, Mr. Damani, I'm following what you're saying. I don't miss a single SIP on a month-on-month basis. I believe my kids are going to have a good run, say in the next couple of, maybe in the next 20 years or so. So equities is the way to go. And you're pretty clear about that. But from this Samvat to next Samvat, what do you believe is the big theme that could play out, Mr. Damani? You've hinted in the past that defense could be one sector that will do well. The financials are well placed as well. If you had to pick on a couple of big themes, what would they be?
Nigel, that's what I spend a lot of my time thinking about. I forget.
But you could share some with us.
But some intellectual said, yes, I will. There's some intellectual who once said that everyone is entitled to their opinion, but they aren't entitled to their facts. The facts are common. And I've been, on the receiving end, a lot of derision sometimes for betting on the PSU stock. And I'm so happy that we've been vindicated by these defense stocks and the enormous run-up that they've had, which we've been well invested in. May I suggest for your consideration that you can look at the railway PSUs. I think these stocks are, as cheap as the defense stocks were 2 years back. They all trade at single-digit multiples. They have a 5-6% yield. And I think what the public will understand in a while, especially after the budget, is that it's a very blunt axe. If the government wants to increase capex in the country, want to increase transportation in the country, want to increase infrastructure in the country, they will express it through these railway companies. That's the only vehicle that they have. And I'm astonished at the valuation of these companies. And I think people who were divisive about the defense stocks, for example, will now be open and take a second look, because what you'll find is what we love in the last street: bargains, bargains, bargains. So that would be one sector to look at. I would also take a contrary bet on technology. I think it's a bit unfair what's happening in technology. These are great businesses. Look at over a 5-10 year perspective. Forget 1 year perspective. I would take a bet on technology.
Sorry, Ramesh, you said defense, of course. I mean, I remember when you had come down to our studios many months back, and I think the rally pretty much started that day, and stocks were up 100, 150% from that point on. Sorry, you said, I missed that, a sector is as cheap as defense now. Are you referring to PSUs? Other PSUs?
That's the railway PSUs.
Railway
look at
PSUs.
the basket of railway PSUs. Because these are the blunt instruments the government is going to use in order to express their capital expenditure over the next few years. So I think there's a great opportunity in those stocks.
And we've got a few listed, and I think there are more coming, making their way to the public markets in that particular space.
I think there are 4 or 5 listed. I can name them. There are 4 or 5 listed. I'll name them, but I'm not recommending any of them. Railtel, RVNL, RITES, to name a few, IRFC, to name a few. I think if we just go and study those, I mean, you may not want to buy them, may want to buy them, that's a call. But I think as an analyst and as a value picker, you owe it to yourself to at least go through and study them.
Okay, by the way, the financials are really ruling the roost this evening. So you have not just ICICI Bank, that's up almost about 2% right now. You have a couple of other names as well. HDFC is topping the charts, up 2%. HDFC Bank, Axis. This whole space, Ramesh, has done exceptionally well. This earnings season has sort of confirmed the fact that credit growth is back, asset quality is stable. But is it becoming too much of a crowded space now, this whole financialization theme? And even investing in banks. And what's the way forward here, you think?
I heard you say that, Sonia, in one of the other programs you did, that it may be a crowded trade. I don't think so. This is still the early innings. I think, as someone else pointed out, that to get a bad NPA cycle takes 3-4 years after a good NPA cycle. So, I think it may be a bit more popular, especially on television channels, but I think it probably will make money for investors.
Okay. Ramesh, before we let you go, this has been a really strange year, right? I mean, it's a year in which you've had highs and lows, and a lot of retail still has this FOMO feeling. What's the sense you're getting? Because we're what now, 5-6% away from 52-week highs. Do you think that it's a market that will move one way up, or are we looking at some sort of a time correction, if not a price correction, purely because of the challenges that we're facing globally?
Sonia, for 30 years, we've always faced challenges. If you go back and look at what has happened in over 30 years in India, you wouldn't invest in India. So that's part of the course. Having said that, I'll stick my neck out and I said the market will make new highs in the next 2 quarters or so. I think it's poised to make a new high. And to answer your question, what should retail investors do? I think the best time to invest was yesterday. The second best time is today. You need to go ahead and invest. And I think they are understanding their message finally. The money is coming through steadily and slowly. They're remaining committed despite global turmoil. India sometimes is now offering a beacon of stability in a violent world. And like I told you, the old rules of the world have changed. We're going to move into an era where China will not attract so much oxygen. India will attract its share because of its size in emerging markets. Anything in quantity you want, you have to come to India. So, I remain quite hopeful, and I think the retail investors are agreeing with me this time. We've often talked about how they've been avoiding the Indian market much to our detriment. And I think as Rhythm pointed out in one of his pieces on television, he said that if you go back to 25% equity of our savings, there's going to be a huge bull run for many, many years to come. So I'm going to stick my neck out and say the market going to make a new high in short order.
Okay. All right, Mr. Damani, always good, hearing your thoughts. Thanks so much for stopping by and speaking to us here on CNBC-TV18. I've always reached out to you for blessings in the last few years, and I'm happy that my first Muhurat trading, I got a chance to converse with you. Good speaking to you and looking forward to chatting up with you.
Always
soon.
a privilege. Thank you.